95% interest-only loans for investment properties.
Yeah,
do they exist?
They do exist. Remember those days?
So welcome back everybody. This is the second video out of the 5 video series on how to buy your first property. Now, in the last video that you watched, in the last booklet, you would have learnt about the importance of planning your journey. And part of that journey and the first step of the whole process was getting a pre-approval. To get a pre-approval, we learned about the 5 C's of lending and how to submit your documents to make the most out of those 5 C's of lendings. Now, in this video and the booklet you would have just received, we're going to be talking about 3 main things. The first one is the home loan features and options that you've got. The second one is talking and negotiating with real estate agents, the sorts of questions that you want to be asking them. And then the third one is how to pay off your home loan much, much quicker. So let's get started. So the first topic that we're going to be talking about in this booklet, in this video, is the home loan features and the home loan options. So from a big picture point of view, you have 2 styles of home loans. Variable and fixed. Now, a variable home loan is where the interest rate goes up and down. And the beauty about a variable rate home loan is that you can pay as much as you want, and if you win lotto, you can pay it off and there's no penalties. A really good variable home loan has what's called a redraw facility. And a redraw facility is one where you pull all the money out and you can use it for other things such as renovations. Now, a fixed home loan is one where the repayments are set for a period of time, typically 3 years in Australia. And what happens is it gives you the surety of knowing what your repayments are like. So if you're worried that interest rates are going up, or if you're planning to have a family, a fixed rate home loan is a really good way to say, yep, I'm comfortable with paying $700 a week, and let's lock that in. Now, the downside with a fixed home loan is that it limits you as to how much you can pay. Typically $10,000. And normally you don't get the features of a variable rate home loan like a offset account and a redraw facility. So a variable home loan, if it's a really good one, will have an offset account. And an offset account is one where you can park your wages and your savings and it offsets the interest on your home loan. So let me give an example. Say you had a $100,000 home loan and $10,000 parked in your offset account. What the bank does is it links those 2 accounts up so you're only paying interest on $90,000. How good is that? You're not paying any interest on that $10,000 portion. So one of the downsides with a variable loan is the interest rates can go up. And if you're worried about that, then fixing it is a way to go. Now, what a lot of first homeowners do is they hedge their bets and they have a tailored loan where they might have half fixed and half variable. What this does is it gives you the benefits of both worlds and some degree of a surety. So the variable side will still allow you to have the redraw facility and the offset account because the offset account's attached to the variable. And the fixed side gives you that assurity of knowing what your repayments will be. Okay. Now, the 2 features of a home loan that I really encourage you to have is that offset account and a redraw facility. Those 2 features of a home loan will give you the flexibility to pay as much as you want and then have the ability to redraw it out. Having an offset account as the center of your transaction world stops the bank from charging you interest in the first place. So every day that you've got your wages sitting in there is every day that you've stopped the bank from taking money or charging you interest. All right, let's move on. So the second topic that I wanted to talk to you about was negotiating with an agent. So when you found a property that you like, my suggestion is to email your mortgage broker and ask for a valuation on the property. Nowadays, it's quite easy to find out what the vendor paid for it. So you can easily see what sort of price that the vendor paid, and it gives you some sort of level playing field compared to other properties in the area. You'll be able to see if there's any renovations that the vendor had made, but just gives you a playing field. Now, the 2 things that you want to be finding out when talking to a real estate agent is why is the vendor selling, and 2, do they need more time to settle, or are they in a hurry to settle or sell? Now, the first one is why they're selling. It's really important to find that out, because if you know that the couple are going their own way, or if they're under financial stress, or they've simply outgrown the property, then you can make an offer that suits their particular situation. So if they've outgrown the property, then they're not so stressed, then you can offer them a time frame of 5 months to settle. If they're going their own way and they want a quick settlement so they can get on with their lives, you might be able to say, hey, look, I'm going to give you a 4-week settlement. So the second part there is all about time. So once you've found out why they're selling, you can really come in and make an offer that's quite attractive. So say, for example, using me, I've got a family of 5. And if you said to me, John, take your time, I don't really have any drums moving in 5 months' time. I've got a family of 5, and to uproot my entire family is quite stressful. So if you've come in 10 grand less than the next person, but you're giving me the luxury of 5 months' time, I'm really going to take that into consideration. Now, likewise, I may have bought my next property, and so I'm stressed out that I need to sell as quickly as I can so I can buy my next property. And if you've come in with 10 grand less, but you're giving me an opportunity to settle in 4 weeks instead of the standard 6 weeks, that starts to become quite desirable. So in summary, guys, get a copy of valuation from your mortgage broker and ask them why the vendor is selling, and then put in an offer based on the time frame that suits the vendor. All right, now the third and final topic is how to pay off your home loan quicker. So the features of a home loan are going to be very important. So the offset account is an opportunity to dump all your money, wages, salary, income, etc. in that offset account. Every day that you've got money sitting in there is every day that you stop the bank from charging you interest, because interest is charged daily and you want to stop the bank charging you interest. So ask payroll to drop the money in your offset account, and then you will be issued an ATM card so you can withdraw cash from an ATM, and you can make electronic payments from there. Now, the second tip is to make repayments fortnightly. What will happen is you'll end up making 27 repayments in a year rather than 12 payments throughout the year. Over the course of, say, 20 years, can you see how you've ended up paying a lot more over time? Because you've ended up paying 27 times a year rather than 12 times. Okay. Now, if you're in a position where you've got lump sums, like a tax check or a bonus or a commission, absolutely dump it into your home loan. And hopefully, if you've got a redraw facility, you can redraw it out. So if you've got plans to renovate and you know that you're 1 or 2 years down the track, then make sure you dump all your money into your home loan, and then when you're ready, you can redraw it out. All right. So I hope that helps, guys. Now let's listen to Ryan. Ryan was a first homeowner that I helped about a year ago, and I'm going to introduce you now to Ryan, and he's going to share with you some of his journey and what he wishes he did better with the benefit of hindsight. Bye for now.
My name's Ryan, my age is 24 and I work in hospitality. I'd say don't rush, take your time. Opportunities pop up everywhere. One thing I probably would like to do over again is not rush into things. Definitely grateful for what's come of it, but rushing into it would be something that I would definitely, letting people know not to do, because it's a big decision in your life, and it's about taking your time for this sort of decision. It's not an easy one.
What would you say?
Mate, for me would be knowing that, I guess if you couldn't put a deposit down or have that money saved up for a property that your family could be guarantor.
Right.
For me, that was probably a big one.
That's a big one, yeah.
It does take a lot of stress off you when you find out that you've got that option. And secondly, probably on the other fence, I guess, knowing that there's a lender's mortgage insurance as well.
That's expensive, yeah.
It's very expensive, but the knowing that it's there, and trying to avoid that at all costs.
Yeah.
Because it is quite hefty. So
yeah.
it's a big price.